AJ. I'm going to pass you the baton, make you the presenter. Look forward to hearing your voice, and perhaps you have some things you want to share on your screen for us.
Hey Dale, how are you?
AJ, great to talk to you again. It must have been 4 or 5 years ago, right, when I was at FX Street?
It was probably that long, and I do believe that interview is still roaming around the web, if I'm not mistaken.
Oh, yeah.
Because when we do these, they get recorded, and in the world of the internet, you can't erase what you put out there. And if you try, it's going to take a lot of effort, for sure.
Yeah, I heard Cambridge Analytics used that interview in the election process. Yeah. So, there's so much going on right now, AJ. Markets have become binary. It's not a grinding uptrend in S&Ps. We have the action in the dollar. What's on your radar right now? I know that you also are kind of a long-term bull in precious metals. I'm wondering where you're at there as well. But what's number one on your radar right now? We're looking at.
I just put a recommendation. I'm giving your subscribers a little bit of a sneak preview into what I do with our followers and our member base.
Okay.
So I'll give you a freebie here. Yesterday, we put out a buy recommendation on Ford. With all that's going on in the world right now, especially with the Fed. Fed came out yesterday, increased rates by 25 basis points, and it looks like they're going to continue to do that down the road. I don't know if I lost my camera here. Forgive me if I have.
You just did.
Okay, there we go.
Okay. All right.
So what I just want to qualify what I'm doing here on the charts for your viewers. I'm a basic presenter with regard to how I look at the charts. You'll notice that my chart setup here is straight candle charts with a 20-period moving average on the chart, which is highlighted in blue right here. Right. And I analyze volume as it compares to price. So I'm very, very, I guess you could say, stripped down in the way I look at the signals. Yeah,
you're almost naked. You're almost naked, buddy.
Yeah, I guess you could say that. But the good news is and I'm just speaking from personal preference here, when I keep the charts as bare as they are, like you see them, I get a crisper signal because I have no distractions that would take me away from, like what we saw yesterday here. The market's going to open up in 27 minutes, but yesterday we closed with a really nice green candle that was very close to a bullish engulfing pattern. And my forecast for Ford, I should move that over a little bit. My forecast for Ford is that we're going to most likely start to move up in an attempt to fill this gap up here, up around $13.
Okay.
Right? And
was
so
that an earnings miss up there?
That's just analysts messing around with their opinions. That's what that is right here.
Okay. It's a hell of a gap. Yeah.
Actually, what happened back here, if I recall correctly, the analysts were commenting on the company not setting expectations correctly for future growth, and that disappointed the analysts, who in turn disappointed the investors, and then you have more or less capitulation coming in, and fortunately it stopped right at a bottom, right around $10, bounced a couple of times and started to rebuild. And I'm a big gap trader, so whether you're trading currencies, futures, stocks, whatever it may be, what I do is I set gaps, and I have a series of rules that I use for gap trading that really put the odds in your favor by about 80%. So in other words, 80-20 rule applies, where 80% of the time we're going to be correct. So what that means really is that if you're right 80% of the time, it's an absolute certainty that you're going to be wrong 20% of the time. You see,
okay, so I know options are your bailiwick. So did you, when you put out that recommendation in Ford, do you put on a vertical bull spread, or how do you take advantage of it in the options market?
Yeah, this was a straight buy recommendation on the equity itself.
Okay.
I have other strategies that I'm putting into place for the option traders. In fact, later this afternoon, I'm putting out a recommendation. I'm seriously considering Facebook as you know, bad as the news is right now for Mark Zuckerberg and company. It looks as though the investors liked it on the close yesterday and rallied the stock up a bit, so that we closed right at a former support level here. So today's going to be critical to see whether or not we can get back up over this horizontal line that I drew for you here, because there's a concept called role reversal, which is nothing more than when support is broken to the downside, support shifts its role and turns into resistance.
Right.
And so we're at that pivot point here where
you want
if we
to show
don't
that chart? I'm just seeing you right now. If you want to show your.
Oh,
yeah.
how is it? Let me see.
Okay, and you don't really feel sorry for Mark. I mean, he's still probably got about 50 billion left. You're not worried about anything.
I think he lost quite a few billion in this last move. Can you see my charts yet?
Yeah, we have Facebook up now. Yes.
Okay. All right. So here's what I was referring to. This former support level right here was broken yesterday and on Tuesday. So we before we can buy this, we have to make sure it gets back up over there. Otherwise, the support's going to turn to resistance, and we're going to have a shift in the short-term trend. But this gap is very interesting. This is the shock of the bad news hitting the market, and it's a pretty big gap. So there is a chance that that gap could fill or make an attempt to fill. So for the option traders, I would suggest maybe selling a credit put spread way out of the money down here, and try to take maybe 5 or 10% out of the market over the next 4 weeks and leave it at that. My goal, by the way, as an option trader is to take out about 10% per month. That's what I shoot for. And I wind up with about 60% return at the end of the year, because you're going to be wrong from time to time. You just have to know how to manage the risk.
And there's always got to be an option right for you to do that. So a lot of it's collecting the premium, isn't it, AJ?
Yeah, I love collecting the premium by selling spreads, and I do diagonal calendar spreads, and I collect premium that way, but in a more directional strategy. For the option traders that are hearing this right now, they know that you could also buy an in-the-money call spread that is the exact same thing as selling an out-of-the-money put spread. So it's your choice. I just like the idea of taking in money. Psychologically, it makes me feel really good that I'm taking money from the market and putting that money to good use. Although, the trade-off is you have to put up margin dollars to collect the money. So it works out in the end. It's a return on investment.
We were talking about a strike. I forgot the currency that it was in. But do you follow, like, for example, there's huge open interest, and we know that the majority of the professionals are option writers. So if there's a huge open interest in a strike price, that their goal is for it to close or pin it near the strike price, so they could take in premium on both the rights of the calls and the puts.
What you've heard, yeah. Well, what you've heard right there is actually based on a paper that I wrote for the Market Technicians Association way back when. It is basically pin pressure, and I developed a pin pressure indicator that's based on open interest. So in other words, the stocks, as they get closer to expiration day for the next option chain that's due to expire, the stocks have a tendency to gravitate to the strike prices that have the most open interest in the puts and calls combined. So an easy way to do this is look at your option chain and look at the open interest on the calls and the puts, add those two together, and whatever the highest number is at that strike price, that's most likely where the stock is going to go by expiration. It's very accurate. It used to be It used to be theory, but now it's been proven quite significantly that options do have that kind of an effect on the underlying stock. So again, keeping it really simple, you know, my record as it stands right now, I'm currently enjoying the #1 stock picker in the world. My percentage of accuracy is over 90%, and I've been tracking this for now 10 years. I have a standing percentage of accuracy.
What publication gave you that ranking?
That's Scotia Bank, Bank of Nova Scotia up in Canada, and also we have TradeStation, which is here in the U.S. When I do presentations for them, we have people that track them, and I have an accounting firm that's verifying these numbers over the past 10 years. So,
okay,
if you like, I can send you that report.
Okay. When you tweet, you always include @Lou Dobbs. Is he a friend of yours?
Well, you know, I have lots of friends in the media network. Lou Dobbs follows what I do. He doesn't always retweet because he doesn't want to get his opinion mixed in with mine. You know, just playing it safe. But I'm currently working on a program with John Nigerian from Fast Money and his brother Pete. We're putting together some educational content that is going to be offered to the general public, and we're going to be doing some live tours. I believe Jim Cramer just signed a contract with John Nigerian and company, and we're going to be touring around and giving some free education away at these live events. So it's going to be pretty.
Let's hear your booyah, AJ.
Yeah, it's going to be exciting. You know, it's been a while since I've been on the seminar circuit. I toured, what was it, for 10 years with Tony Robbins out in Europe, and the audience loved technical analysis in its most basic form. Again, like you're seeing it.
Yeah.
And kind of refreshing because you don't have to be distracted by too many indicators and oscillators. So although I'll throw them on from time to time, it's nice to look at the bare data.
So you know, you've given us a couple of examples of both potential longs with the market failing, S&P's failing up at 2,800 last week, about 78.6 back from that February smash. Are there things that you're shorting in this environment?
Well, I'm not shorting too much at this particular point because let's take a look at the Russell 2000, for instance, which is a more broad-based index here.
Yeah, it's held up better than the rest.
Yeah, and you have to weigh the markets, you know, more or less the Russell 2000 being more of a broad-based index than, you know, the S&P 500. Yesterday's green candle was promising. I have a price target for the Russell a little bit higher here, right around 1580. I'm sorry, around 1606, right there. And
so the old highs or surpass them?
Yeah. So I think what we're seeing here is we're seeing a little bit of a bounce off of the 20-period moving average, and
yeah, it'll open lower today.
Yeah, and that's okay because it's, you know, how it closes at the end of the week that really matters for me.
Okay.
And so yeah, I think we're going to test that resistance, and then we could start rolling over. So I'm not going to take any short positions just yet, but my weekly market reports that go out every Friday evening have been very, very accurate. And once this is my forecast target right here. Next Friday, I'll draw a new target and then erase this line so that we don't have to look at that anymore, and then we keep tracking week by week. So it's a good indication of, you know, where we're headed on the short-term trends.
Okay, so you're not really bearish the market. You sound pretty sanguine.
Not yet. But you know, when you look at, let's say, again, look at the Qs, for instance, which is really more or less the tech sector known in the power shares. Yeah, if you look at this,
is that an island top?
Yeah, it could very well be. It could be. But when we look at the weekly chart on this, it's going to give you a slightly different picture. We're still in a significant upward trend. You could even look at this as an upward trading channel.
Yeah.
So until we break down, you know, we have a lot of congestion up here, confusion. But, you know, 2 weeks ago on the weekly chart, we had a fairly significant bullish engulfing pattern right there that I hate to argue with, you know, and
right.
So even with the Qs, very rarely, if at all, do you see gaps on the NASDAQ market here that remain unfilled. So I think the NASDAQ market is going to come up to fill this gap, 80% chance that that will happen. And then we can start to see a rollover. And then once you start getting below, you know, some of these trending lows right here, of course, this is just one exception to that when we sold off, but once we start breaking down below this trend line, that's when all bets are off for any new long positions. And then we start to take diagonal put spread strategies on with the option trading. So we'll start to buy long-term puts and then wait for the markets to pull back before we sell the short-term puts against that to turn it into spreads. So
okay.
Again, okay. You know, I don't know, you know, how fluent your audience is with regard to options, but I will tell everyone, whether you're an option trader or not, it's very much worth your time to learn even basic option strategy so that you can at least understand how the option traders are viewing the market and how they're positioning themselves accordingly. And,
yeah, well, you know, your soon-to-be partners always bring up on CNBC when they see a lot of size coming into certain strikes that that's a market
okay.
tell for them, you know, size of positions, you know, unusual option activity is some type of market tell.
Yeah, well, John Nigerian and his brother Pete founded Option Monster, and they developed software that shows all of the major, you know, volume coming in to the option markets, and they've been extremely accurate. They have a monthly service as well that I'll be happy to plug for them. But the bottom line is that when you start to reach market tops, and again, I'm staying on this weekly chart to look at the diamonds, which is the Dow Jones Industrial Average ETF, you start to see these patterns that are no longer consistent with past history and the way the upward trend was just flowing. This is all the Trump effect here. This is, whether you like Donald Trump or not, it was his optimism and continued optimism in the economy that was driving these prices. Now,
so what was it? Was the down in February the Trump effect too?
No, well, no, the down in February.
How about the Mueller effect? Could it have been the Mueller effect?
Exactly. That's exactly what I was going to say. It's the Mueller effect. And, you know, investors love optimism, but as soon as confusion or negativity starts to roll in, you get them moving to the sidelines. I mean, this is just investor psychology. They start moving to the sidelines and they'll wait for something more satisfying that they can grab onto before they put their money into the market. But with the Dow, again, even if I were to go back and look at a monthly chart here, you have to admit this is a pretty extreme bull market. I think it's now going on record as close to being the longest running bull market in history. Right now it's number 2, but you look and you see the angle at which the market has been rallying is becoming more extreme and more vertical. So
they're about parabola.
Exactly. So when this correction does take place, notice how convinced I am that it will take place. But when it does take place, you're going to see pretty major pullbacks here in the Dow. You could see a 4,000 or 5,000 point drop in a matter of just you know, a year or so. And that, although that's not what we experienced back in 2008, it could be significant enough to get you know, to shake out the longer term investors and get them to move to the sidelines.
Okay, so this is how good my memory is. Last interview, which we've already said was many years ago, you were very constructive on the silver market, and you told me, you know, you believed in taking physical possession, and I asked you for your address, which you wouldn't give me. So, you know, I'm wondering where your head's at now. It's been, you know, we're in the sideways range. There's a little heartbeat. And do you see anything here in silver or gold that interests you one way or the other? Okay.
Yes, and this analysis could really help a lot of your currency traders, because I still look at silver and gold as a currency more than a commodity. I've been trading gold for a lot longer than this chart records. I've been trading. Let me see. For 35 years now, I've been trading gold. It started as a COMEX trader, and you could see that there's a amazing. This consolidation pattern back here is forming a longer-term base. And for the technical traders out there that like to identify price patterns, this is a triangle pattern that is right at the apex at this point right now. You look at this, and I believe we're going to start to see a breakout to the upside. And it may not look like much because this is a 20-year monthly chart, with silver closing yesterday at 1565. But it could easily get back up to test these highs right around 19 and 20. So percentage-wise, that's a pretty good shot with very little downside risk, because you have support right down here. And that's a triangle pattern I've never seen in my 35 years of trading it. Nothing like that.
The longer the base, the bigger the launch into space.
That's a John Murphy quote. Yes, absolutely.
Yeah, and you know who claims it? Luis Yamada.
No, that's John Murphy.
I thought it was me.
No.
I must be imagining it because I've said it. I thought I made it up, but
no,
at my age, huh?
John is a member of the Market Technicians Association. He coined that back when he was an analyst at CNBC, and I think a lot of people rephrased it and borrowed it a bit. But that's okay.
I think he heard me say it. Anyway, so AJ, so that's anything in energy, because I actually think that what's happening in the Middle East. I'm not a big geo guy, but I just see, the first trip that our president made was to Saudi Arabia. There's proxy wars going on in Yemen. The Revolutionary Guard is shooting down Israeli airplanes, and I think Netanyahu's coming here. I think there's a potential, decertifying the deal of some type of hot conflict in the Middle East, and I think energy prices could soar. And there's still a lot of bearishness ingrained in the market after that big decline to 25. So I'm wondering what
look at this. Yeah, this is the Barclays IPATH crude oil fund that they have. It's OIL for oil, obviously. And this is a 20-year chart, and you can see that oil here on this chart is at a 20-year low. And the biggest challenge for those who trade oil is now the U.S. has risen to be a very powerful supplier, and that it's no telling how long that's going to keep pressure on the oil market. However, if you look at OIH in the oil holders, let me see if I can get to the daily chart on this. I'm going to go to OIH right here. This is the Oil Services Trust.
Much more constructive chart.
Yeah, you see, and I'll erase these lines again to keep from confusing the picture here, but you could see that yesterday we closed with a pretty significant bullish pattern. That green candle that you see there, right here. That's convincing. It's on higher volume. So remember when there's a couple of things going on, and forgive the teacher coming out of me here right now, but when you have a stock closing over the 20-period moving average, that goes back to what Jim Robach would teach for many years. You buy it over the 20-period moving average as it's crossing, and you can see that the increase in volume is supporting the idea that buyers are becoming motivated. That increase in volume is the only real leading indicator you're going to get on a chart. And so many people ignore volume, it's a shame. But look, if we close any higher than we did yesterday, you're going to break out over these short-term highs, which could propel the oil holders here higher. And I wouldn't be surprised if it gets up to $28. It's going to make its way up there. But I think that this looks very, very bullish. So for the equity traders and the option traders, there's a lot of good candidates out there.
What a great interview, AJ.
Well, thank you. I tell you, I miss talking with you. I hope to do it again sometime soon.
Yeah, you know, I mean, I could ask anything. I could even wrap it. Do you have a view on bonds and interest rates? And we could wrap it with that. Or is that kind of like, you know, a no touch for you right here?
Well, I like the fact that the Fed, you know, Fed Chair Powell now is approaching a stance where, you know, it's okay to raise interest rates. The only downside to that is with every increase in rates, we're going to see a dramatic spike in our national debt because the cost to carry the debt is going to go crazy. And they'll, you know, we don't have to worry about that too much. I think the economy is rip-roaring good, and I think that the job market is getting better. And I'm just the ultimate optimist. But remember, if you are trading the markets, all you have to do is prepare to the downside. On our website, we have a video that talks about the 1% rule for managing risk. I would embrace that wholeheartedly and expect that you're going to be wrong from time to time. And then when you are wrong, you're only going to lose 1% of your account if you do this correctly. So
great advice. The difference between pros and amateurs are pros know how to lose, so they have money left to be right with.
Absolutely true. Absolutely.
And that for sure is something I made up.
I like it. I'll quote you. In fact, I'll get John Murphy to quote you.
All right, AJ, thank you so much. May winning trades continue to rain down on you and your clients and your students, and really appreciate you giving us some of your time today. And you're now my official Trading Warrior brother.
Oh, very good. Thank you so much.
All right, AJ. Okay, and there's AJ's website, and the Options Oracle is the name of his letter. It's also his Twitter handle, @the Options Oracle, and the Market Guys. You want to learn about options, and you know, I love options, especially for people that don't have a lot of capital. You know, you can take some decent speculative shots without having to, you know, put 30 grand into a position. So thanks again, AJ, and good hunting.
Thank you. You too. Have a good week, everyone. Bye-bye.
All right. Thank you, AJ. Adios. Okay, that's it. Everybody, you're welcome, Tom. Yeah, AJ is excellent. I recommend you guys follow him at The Option Oracle. His website will be listed on Twitter. You're very welcome, Tom. I'll see everyone tomorrow. We'll have our TGIF session. And most of all, everyone, you know, I know we had a good week with the Fed and being short the dollar and short US dollar yen, and that's great, but don't just count your pips, count your blessings, and I'll see everyone tomorrow. Adios. Thanks again, AJ.